Welcome back to an episode of the Stablecoins in Gaming. I'm your host, Flav, and today we have an incredible guest joining us to bridge the gap between traditional finance and the digital asset space. We're going to unpack exactly what it takes to build a truly global, frictionless economy, obviously with a focus on gaming, but not only. And in this episode, we're going to cover a few things like the creator economy nightmare. We'll discuss why cross-border payouts are broken and how to fix it. We'll explore why integrating alternative payment wells is not just a nice to have feature and something you call actually as a company the stablecoin sandwich, or what it is exactly. But before that, I would love to welcome our guest, Angeli Amin, head of growth of Europe at OpenFX. How are you, Angeli?
I'm doing great, thank you. Great to be here with you, Flav. Thanks for
No,
having me.
thanks. I'm excited. Thanks for being here. It's gonna be a great conversation based on a lot of things going on at OpenFX, but obviously based on your experience and specifically also that you are managing Europe as well. So it's gonna be an exciting conversation. But before going into that, I would love to learn more about yourself. So can you walk us through your background? How did you transition from what we could call TradFi, so traditional finance, Web 2, some of them call them, into the digital asset space?
Yeah, absolutely, sure. So I'll start from the beginning because I have European roots. I was born here in the UK, grew up in Switzerland, and then went to study and started my career in the US. I started my career, as you said, in traditional finance, first at Citibank doing credit investing, and then later at a hedge fund, again doing credit and distressed investing. So really great place to start my career and learn. But I realized doing that, being an investor, you're always a bit arm's length of companies and helping them from the sidelines, but not really kind of from the center and from the company. And I always wanted to try my hand at being an operator rather than an investor. So I went to business school and then made a pivot into fintech. I was very fortunate to kind of come back to London and join a fast-growing, at the time, lesser-known fintech called Checkout.com. For those in Europe and in the fintech space, you'll know that that's one of the largest and most well-known fintechs in Europe. It's a great growth story. So I was very lucky to join in the middle of COVID when online payments were really surging. And so it was a really exciting time to get behind the curtain, so to speak, of fintech. I think as a consumer, you're always, your experience is always about just being at the surface and how you're interacting and how you're purchasing things. But really, in hindsight, I had no idea what was happening in the background and the infrastructure and the complexity of what makes your very simple tap experience online or in store so smooth. So it was really great to work there for 6 years. I had several different roles across strategy, chief of staff, and transformation. And then about 3 months ago, joined OpenFX to lead Europe. So OpenFX is a cross-border payments business. We focus on FX conversion and same-day cross-border settlement. And really, that's leveraging stablecoin infrastructure. And so it's been really exciting to see, almost in each stage of my career going more and more from TradFi into new technologies. So yeah, it's been a great journey so far.
And how would you define that move? Or how did you find out about this kind of new world where we like to say Web3, obviously based on your experience in the TradFi ecosystem, but how did you find out about what's happening related to blockchain, but specifically around blockchain payments or stablecoins and other crypto payments maybe?
Yeah, absolutely. So while I was at Checkout, we were very involved at different points in time in stablecoin and crypto. Yeah. We were probably one of the leading merchant acquirers in supporting the new wave of crypto exchanges and really the beginnings of the on and off ramp. So moving funds from fiat traditional, infrastructure into exchanges and, having the right rails to do that. So I was sort of in the industry from a different angle. But as you can imagine, with the waves of crypto, companies have differing, let's say, enthusiasm for investing in the space and risk appetite, of course, which is a big thing. So we were there invested in it, but then really it's only when I joined OpenFX have I been able to see the underpinnings of how that works, and maybe even a new world of infrastructure with stablecoin becoming more and more prevalent in the space, especially for cross-border payments.
Yeah, I love that, and that's why it's going to be a very interesting conversation, because in our report, the stablecoin in gaming report, FX foreign exchange was obviously not at the center, but one of the important elements of the kind of study we had, based on how powerful is stablecoins, based on your ability to remove a lot of friction between countries. So we're going to talk about that a lot. But before going into this, I wanted to highlight a few numbers I've seen around the stablecoins market, because it was 1.2% week over week to 303 billion. While in terms of average daily users, it's 2.3% increase to 4.3 million. We got a good news. I think it was 2 weeks ago, 3 weeks ago. I think 2 weeks ago, MasterCard recently acquired BVNKey. That we will have in the podcast as well. So it's going to be an interesting conversation as well. So BVNKey, which is a stablecoin infrastructure. So it seems like there is growth, there is continued growth in terms of adoption. Why are we seeing so much excitement from the traditional finance ecosystem for stablecoin specifically? It seems like financial institutions, are getting into speed.
Yeah, I think the short answer is really just because it's solving such a huge pain point today.
Yeah.
You'll see adoption in any kind of technology is driven by where it's having a real use. And we can see that trend in stablecoin as well, where the adoption is much, much faster geographically in regions where there are bigger pain points. So Latin America is a really great example where you have a lot of currency volatility, difficulty moving funds in and out of the country. And so when you have a technology like stablecoin, the infrastructure, the stablecoins themselves, how they really facilitate that movement, it almost just becomes a no-brainer. And it's so obvious that this is a better replacement to the very slow and clunky infrastructure that we have been using to date. And that infrastructure is banking infrastructure from the 1970s. So I always wonder, in what world, in a world where everybody is changing their iPhone every year, where else do we use infrastructure that's 50 plus years old? And that's when you're really seeing stable coins have a real use case. I think the other thing is, we saw the adoption of crypto was very much siloed for the first few years, where it was a small group of people, and maybe it's more from an investment use case. Whereas now you're seeing stable coins be a very real practical payments use case. And I think that's what's really unleashed the adoption, especially by more mainstream institutions.
And it seems like, and that's something we're seeing these two in gaming with gaming entrepreneurs. It seems like for the financial institution to accept this move, it seems like you still need to use and to rely on familiar payment process that you already have. Let me know if you feel it that way. If you want to benefit from a definitely different technology, which is blockchain and specifically stablecoin, you need those institutions using an old-fashioned way for payment, to actually rely on something they already know by using a new technology. Do you feel it that way as well on your side?
I think that's definitely true. As you have that adoption curve of, to make the jump into a new technology, the smoother it is, the better. So from a customer perspective, it's a win if I'm not, as a gamer, I don't want to think about payments and FX and which ramp and which payment rail is being used in the background. I just want a stable token of value that I can convert very quickly into my bank account and then use and spend. That as a gamer or as any consumer is what I care about. So really what you want is it's almost boring from a consumer perspective, because nothing is changing for you. You don't care if it's 1970s banking rail or stablecoin rail. When you start to care is when you get a much better experience. It's a much faster, much more secure, much cheaper for you. And then you might just start to pay attention. I almost, the analogy I sometimes use is the world of electricity and power. Let's say, I'm going into my living room and I'm switching the light on. Very simple flick. I don't even think about what happens in the background. I just need that to work. The only time you start to care about it is when you flip the switch and the light doesn't turn on. And then you might want to have to go into understanding, where did my power come from? Is it solar? Is it nuclear? What is the grid balancing of the power? All of that stuff that none of us really want to care about. That's the way I sort of see this new technology, is as long as the customer experience is either staying the same or getting better, that's when the technology is winning.
Customer experience, but also the experience from the perspective of the company itself using these new payment rails. And I don't know if that's something you do as well at OpenFX. I didn't ask, but one of the benefit of stablecoin is around corporate treasury management, because you have so much options using stablecoins. I don't know if it's a part of what you do as well, but in the same framework, the company itself has to understand the benefit of it, I guess, but without the friction of understanding the technology behind and what's happening under the hood, I guess, right?
That's exactly right. There's I would say in my mind, there's two big use cases for leveraging stablecoin technology. It's the customer use case we just talked about, which is improving the customer experience, being able to pay out to gamers in a standardized, better, more efficient way. But then there's also for any large corporate company, big bank, international gaming company, the complexity of your internal treasury can be huge when you're a very international company doing these cross-border flows very frequently. And so one of the biggest use cases in my mind for stablecoin is optimizing treasury, just being able to move funds from your own accounts as a business between, let's say, Brazil and Europe, and being able to do that efficiently. Today, it's really crazy. Even if you have very large banking relationships with global banks, it can take 3 to 5 days, sometimes more if you have bank holidays, to move your own money from A to B. And if that 5 or 6 days is a time where you don't have those funds to generate income, to give a better service to your customer, and to generate interest, that's actually going to somebody else. And so we can see like that is actually a huge, almost like a trigger to more stablecoin adoption. We actually just saw it's Credit Agricole, one of the largest banks in Europe, was just announced that they're going to be issuing their own stablecoin. So this is, again, the first use case that they're using it for is internal treasury. So you can see even if you don't talk about your customers, there's a huge benefit to any business doing cross-border transactions internally.
It's actually highlight a conversation I had 2 years ago with a game studio from Brazil who has this kind of challenge, and it's actually one of these conversations which led us to do the stablecoins report. So if we have to go a little bit into the creator economies, because it was part of the conversation I had with him, as games evolve into this massive creator economy, like what we see with Roblox, like again, Roblox, Fortnite, the two biggest games in terms of players, but in terms of how much money creators can get from it, from building things, so what we call UGC. So we see Roblox, what you call DevX, and Fortnite UFEN, which is official programs that lets the creators convert the currency of the game into real money. So they are creators, they can create a lot within the two games, and they can get money, so they can run a business based on what they built on those two worlds, which is crazy. Like we've seen the last update was the top 1,000 developers make an average of around $1 billion per year, which is mind-blowing for the top 1,000. So in our BJ report, we highlighted how cross-border payouts suffer from these massive friction because they're losing a lot based on how much they take from the game token to real money, but obviously having to apply the FX fees because they come from all over the world. Why are global payouts so hard to solve? And how does stablecoins infrastructure solve these nightmare in terms of operation for business owners? in gaming, as we are talking about, but merchants as well, trying to scale their global creator ecosystem?
Yeah, that's a great question. To answer, I'll try and describe the differences between pay-ins and payouts, because
Yeah.
people always ask, pay-ins, it's very straightforward, it's very developed. Why can't we just use the same rails and reverse and move those funds and back the other way? So pay-ins are really designed. It's a many to one system. If you think about the thousands and thousands of gamers paying, let's say maybe not gamers, but e-commerce paying into one company, those are standardized flows. It's a single API, and it's very a mature market helped by very large credit card payment schemes and merchant acquirers that have optimized your acceptance into one way. When the company, a gamer, wants to go the other way, it's the one to many. So you have thousands of different customers in hundreds of different countries that have their own regulatory scheme, that have their own payment rail. And that's really when you start to get the friction. It's just very fragmented, and instead of aggregated going the other way.
And we're talking about SEPA for Europe or PIX for Brazil, right? Or
Yeah.
as an example.
So it can be, yeah, exactly. So in countries where those exist, actually, that's actually already a big win, because otherwise you're having to use international payments are mostly done by SWIFT, which is the infrastructure I mentioned, which is older, slower, and relies on correspondent banks. So you can only move across those rails when those banks are open, and oftentimes to get your payment from France to Mexico, it hops 3 or 4 different banks, and that's when you start to get it's almost like a toll road. You get fees at every spot, you get FX, and sometimes you have access to a fast payment rail like SEPA Instant or PIX, but sometimes you don't. And so the gaming company here in this case, who it's not really, they're not a payments company, they're trying to go and focus on content and engaging with their gamers. They have to then sort of solve this additional problem of how do we get sometimes quite small amounts to our customers in far to reach places, and that's when also the costs start to add up. So that's really why why you have that fragmentation, and once you solve that, if you can reduce those barriers, and that's where stablecoin comes in, where instead of having to run through those hops, I almost see it as, instead of a toll road, you're suddenly using a hyperloop system where you can shoot funds, from, in the example we shared, France back to Brazil. Now you still have to then convert back into fiat currency, and so that's where the stablecoin sandwich model comes in. So in this example, you would convert euros into stablecoin, you would use that stablecoin 24/7 rail, and then you would convert those funds back into Brazilian real, and ideally move them through PIX and to your end customer. And so that's really I think the excitement around stablecoin is really solving all of that friction to be able to do those one-to-many payouts in a much more efficient way.
So the stablecoin sandwich, like you pictured and you depicted on the report you have launched, and I will add the link to the OpenFX report, which was launched a few weeks or maybe a few months back. It's packaging everything, every difficulties you could get from the payment, any kind of the payment processes you could get as a business owners, right? It's to make it flow fluid, I would say.
Exactly. It's taking a very fragmented system and replacing each fragmented leg with ideally a faster payment rail, which exists locally, and then the international leg is done with stablecoin.
We talk about you talk about a little bit around Latin America in terms of adoption of stablecoins in crypto in general for the reasons you evoked, which is primarily trying to escape a little bit the kind of currency they have, national currency they have, which is fluctuating a lot. So they want to rely on something which is not moving so much. So stablecoins, even crypto, was actually good for them for the past 5 years. So in terms of usage, they know how it is. They know how to use it. At the same time, especially for game companies, you see a lot of upside of expanding the reach of your players within those regions, specifically Brazil, Argentina, but also the Philippines in Asia. So, do you see that behavior, which is acceptance of stablecoins, being a win for a company like a game company want to scale globally into those specific regions? You see a fit, you see an opportunity.
Absolutely. I think the beauty of now, stablecoin and payments companies partnering and collaborating with international companies is just the synergy to help businesses unlock new markets. And the best markets to do those in, especially for gaming businesses, are the ones where there's fast stablecoin adoption already. I mean, in Latin America and the Philippines, a lot of especially young consumers, not even the businesses, the consumers themselves already have a wallet and might even have a card to be paying stable coins, for their groceries and whatever it might be. So if you already have that infrastructure and the customer familiarity, then in some ways you don't even need to have the last mile to Brazilian real or Filipino peso. You can just send those stable coins directly into the customer's wallet. And that's also, we see a lot of demand for that, what's called on and off ramping. So just
Yes.
moving into stable coins and potentially even staying in stable coins. And that could even be a more cost effective approach for the gaming companies themselves, because they don't then have to worry about that last mile. I think we're still early days in that infrastructure. It really depends on which market you're in. We'll see where Europe goes there as well. But we are seeing a lot of even enthusiasm in Europe, as we said, with some of the larger institutions as well.
Good segue, actually, not on purpose. I know that. What's missing to go a little bit further in terms of adoption? Is it related to regulation? Is it related to time, just to understand the technology, be educated on that? Like, how could, because we see the possibility and the advantages as a business owner, but for the users as well. What's missing to make it even more important for everyone?
Do you mean specifically in Europe?
It could be a two-part question, like globally and maybe in Europe specifically too. Yes.
I think definitely regulation. You need the regulatory tailwind behind you as a business. I think consumers are going to follow what is available in the market in many senses. So whether the companies themselves, infrastructure companies like OpenFX, but also gaming businesses, are they willing to adopt that technology? Are they willing to, use stable coins for treasury? A lot of that depends on, is it regulatory compliant to do so? And we know places like Europe tend to be a little bit more conservative, and therefore that regulatory piece is even more important, I would say. But I would say also it's just the maturity of the different pieces of the puzzle. So, as we talked about, OpenFX is very focused on the FX infrastructure piece, so helping that conversion element. But then there are other players in the ecosystem. So, as we said, in order to accept stable coins, a company needs to have a wallet established. So you need wallet providers, and you need safe custody of those funds. And so you need investment in these different steps along the way to then make it really easy for the customer and the company to just plug in. And actually what's exciting is we have that maturity, and it's just getting better and better every day. So I do think it's a matter of time. And we're seeing a lot of regulators are just, really just allowing or creating the environment to issue, privately backed stable coins. The Hong Kong regulator recently enabled the issuance of a Hong Kong stablecoin. So as you get more and more jurisdictions enabling their own currency stablecoins, you get more efficiency in the system. Because right now what you have is a very US dollar focused stablecoin infrastructure.
98% of stablecoins are actually pegged to dollars, which is crazy when you think about it.
Yeah, exactly. And it doesn't make sense. it's what happens there is you have this sort of dollarization of currencies that if you want access to this, faster, better infrastructure, you have to be converting into dollar stable coins
Yeah.
over time. And so there's an FX element to that. But over time, as new stable coins are issued in local currencies, you'll get even more efficiency in the system because you can have that one-to-one between euro and a euro stable coin or pound and a pound stable coin.
Okay. So do you feel like in Europe specifically, we still face, based on the fact that I have USDT, I have USDC, I don't have any stablecoins pegged to euros. I should maybe, but I don't, for different reasons. Are we still in a situation in Europe where we face, you know, foreign exchange transactions that we could remove if we actually had the benefit of a pegged euros stablecoins?
Yes, absolutely. I would say we're on a very good journey, meaning what we have today is still a lot better than what we had yesterday in
Definitely.
the sense of what we talked about, which is, yes, you have that additional FX conversion, but you still have much more cost-effective and faster
And
infrastructure
speed, yeah. Yeah.
for payments.
Mm.
I think what's exciting is that there's even more benefit to be had once um, once more local euro and sterling stable
Yeah.
coins are issued. And by the way, there are lots of companies that are planning to and have already issued stable coins. They're just very early stages,
Yeah.
kind of fledgling, just building out their use cases. I think for me, what will be very interesting to see is rather than having too many smaller ones, what you ideally want is, one or two big winners, because really where stable coins have the most utility is when you have very deep liquidity in those stable coins, meaning if companies, especially larger companies, want to move big amounts, if you
Yeah.
only have 10 million of euro stable coin in circulation, you can't move 20 million. You can't move it either at all, or you can't move it cost effectively. And we saw a very extreme example of this in the crypto space when a trader, tried to swap something like 50 million USDT for an Aave token and got
Yeah.
less than 40,000 back. And that, I mean, that's a very, very extreme example, but it's a good example of how if you don't have the liquidity or the funds in circulation, you can't make those conversions. And then the system, you're just creating more friction in the system. So I would like to see in the future, a handful of euro and sterling and other euro currency or European currency stable coins winning. If we have too many and they're all small and they're all sort of competing against each other, maybe we lose that benefit,
Yeah.
in terms of competing with the rest of the world.
Agree. That's interesting because it feels like if you want stablecoin adoption in Europe specifically, because we talk about that, you need to have trust. It's the basic of all currency in the world, digital or physical. But if you want trust, you need to have deep liquidity, as you said, but meaning you need to involve everyone in the process, involving banks as well, to make it trustworthy. So yeah, that's interesting. And to finish with one question again around Europe, because I wanted to get your take on something which happened like 1 week ago or 2 weeks ago, which is the EU, so the Europe unveiled a scheme to make it much easier for startup to launch and grow across the 27 nations. It's part of a push for Europe to help Europe to keep up with other rivals from the US, from China, and etc. The new system will allow for entrepreneurs to set up a firm within 48 hours, fully online from anywhere inside the bloc, the EU bloc. Um, as the head of growth at OpenFX for Europe, how do you understand this news? It seems to me that this initiative is aiming to remove the bureaucratic friction of expanding across borders, and stablecoins removing the financial friction. So it seems like the two should actually please everyone. What do you think?
Yeah, that's a great question. I mean, I think firstly, it's a great first step because as I've been doing more and more in my new role, I've been really trying to understand how Europe is like unlike other regions like the US, very fragmented. even though we have the EU, we do have very different, even cultural aspects in every country. And prior to this new ruling coming out, I saw a table showing how long it takes in each country to set up an entity, and it varies from 24 hours to 2 weeks.
Yeah.
And so, in that sense, this is great news and really exciting for entrepreneurs because there are so many frictions entrepreneurs have along the way, and the more we can unblock those, the better. I think when it comes to helping those businesses expand internationally, I think it's really only step one, and there are a lot of other ways that we can be looking to support entrepreneurs looking to expand internationally. And for me, what I see in my role, one of the first ones is setting up and opening a bank account.
Mm-hmm.
This is one of the hardest things businesses do, not just locally, but more and more internationally as well, to enable a gaming company to be able to send to their customers in Brazil sometimes, or any other country. They have to either set up their own bank account there, or they have to rely on other infrastructures where the more and more you layer on, the more margin you lose. And
Sure.
especially when we're speaking about, I would assume, gaming businesses, fintechs, they're fairly thin margin businesses, and so you need to optimize at every point. And if you're having to spend so much money using other people's infrastructure, then your business model might erode. And so I think the next step we need to see is we need to really make it much easier and faster to set up banking infrastructure, because once you have that, then you can leverage, for example, OpenFX to help you move the money between those accounts.
I love that. No, it makes a lot of sense. I mean, thanks a lot, Angeli, for the time. It was interesting to actually understand from your point of view how cross-border payments actually could be revolutionized based on the technology we have, which is stablecoins. But we have a lot of challenges along the way. We look specifically. I look excited, maybe too much excited for something which could make a little bit of time to be implemented, obviously based on the different things we talked about. But I'm excited for sure, and you should be in a few days because you're going to be at FCC Can. For the release of the report, you may the release of the episode, it might be after FCC Can. But what kind of conversation you are expecting to have with people in Cannes, FCC Cannes, which is the biggest rendezvous of blockchain builders from Ethereum in Europe? So what do you expect to talk about with people there?
Yeah, I think firstly, I'm very excited to go to my first ETH. I've been to some crypto conferences in the past, and to be honest, being reasonably new to the world since joining OpenFX, it's just really exciting to see what people are building on chain, how they are. It's just a whole nother world to maybe as an outsider you think about exchanges, but then you look inside and there's this whole other universe. And I almost see, the more I see, especially in the financial world, so much business is moving on chain. People are realizing the benefits of blockchain technology, of 24/7 availability, of just you get the trifecta. You get good, fast, and cheap. Usually you only get two of those, and here you get three. So I'm just excited to speak to founders and understand what they're doing in the space, and hopefully to support them in their cross-border payments journeys.
Love it. Then again, Angeli, thank you very much for your time for this episode. Really enjoy that, and wish you good travel to France
Thank
and
you.
having a good time there. But thanks again for making it for the episode. I really appreciate that.
No, thank you for having me. It's been really fun speaking to you. Thanks, Flav.
Thank you, everyone, and see you next time.